You can experiment with your investments. Choose the stocks you like one by one, or select Sector Spider ETFs and add the diversification of an entire sector of the S&P 500, like healthcare. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
If you own a portfolio of investments, I want you to carefully digest today's episode and, if necessary, watch it several times. It doesn't matter if you're new at investing or a veteran with many years of experience. It also doesn't matter whether you have a tax-deferred retirement plan like a 401k or a Roth IRA or a taxable portfolio. Let me be as explicit and direct as possible. There are certain attributes that distinguish an unhealthy or sick investment portfolio from one that is architecturally sound. What are those attributes? Well, let's analyze 4 symptoms of a sick investment portfolio. Symptom number 1, elevated and opaque investment costs. There have been multiple studies over the various decades that have shown a high correlation between consistent market underperformance and high-fee mutual funds. Moreover, other costs like brokerage trading commissions can erode returns. Finally, opaque fee arrangements with financial advisors or hedge fund managers or other types of financial intermediaries that make it difficult to assess the cost of investment advice is a telltale warning sign of a sick portfolio. Symptom number 2 is excessive risk-taking. Whether it means over-concentrating money in one particular stock or fund or asset class or relying on leverage, sick investment portfolios have a common denominator in that they take risks that are abnormal and completely unnecessary. Although some people, especially experienced investors, may feel comfortable with taking additional investment risk, it doesn't mean that they should or that there won't be dire consequences for doing so. Symptom number 3, being devoured by taxes, another sign of a sick investment portfolio. And really, when you think about it, investment portfolios that are unhealthy are not built deliberately to minimize the negative impact of taxes. Now, whether that means owning tax-unfriendly investment products or engaging in poor asset location or having ill-timed asset sales, sick portfolios invariably expose their owners to unwanted tax liabilities. And finally, symptom number 4 of a sick portfolio is market underperformance. Now, despite a favorable stock and bond market over the past several years, many investment portfolios that I've analyzed and graded are still lagging behind key market indexes and the ETFs tracking them. And it's really disappointing for me to see so many portfolio report cards with unsatisfactory grades. What's wrong? Well, performance problems point to major portfolio problems, major flaws in the design. Now, contrary to what you may have been tricked to believe, a healthy portfolio is not necessarily the investment account that owns the hottest stocks or owns the hottest funds. In the end, recognizing and avoiding the 4 attributes that we just talked about of a sick investment portfolio can mean all the difference between investment failure and investment success. And I hope you succeed. I'm DeLegge with ETF Guide.